When someone comes to me and they're looking for an investment, I like to identify several factors. And these are the same type of factors you should look at before you actually purchase any investment real estate or any real estate for yourself. The first thing to look at is, what are your long-term objectives? So if a client comes to me, I say, well, where do you want to be in 10? Where do you want to be in 20 years? And from there, I work backwards. If someone tells me they want to have $2 million to retire, maybe we're going to need something a little bit more aggressive. If someone says, I just want to be financially set, maybe have 600,000 or 700,000 in my portfolio, which personally I don't think is enough, but let's say they said that, I would set their goals in a different place. So it's all about expectations, which is success is a function of those expectations. So you need to know where your endpoint is, and then you work back when you're dealing with real estate. Another thing is, I need to know the income. What is the income level? What is the credit score? So those are always key factors, and is what's going to allow you to really be successful in the real estate industry. You need a certain amount of income, and the rule of thumb right now is, if you're going to get approved for a mortgage, you need 4 to 5 times what you make is what you're going to get approved of. So for example, if you have a spouse or a partner and you make $100,000 a year combined, you can buy between $400,000 and $500,000 on a property, depending on your debt level, of course. But this gives you an idea, without going through all the traditional channels, whether it's a mortgage broker or whatever, what type of properties that you should be looking at. So I think that's one of the very important things, is before you start your search and you set your goals, knowing whether they're obtainable and what price range are available and what is available in your market segment. Another aspect that we touched on was credit. Is your credit in the correct place that it needs to be for you to be successful? On average, you need at least a 650 credit score if we're using Equifax. And there is other people who provide credit, or other companies who provide credit. It would be TransUnion and Equifax are the major credit providers. And we're going to touch on that in one of the future segments about credit, what credit means to you, and how it can impact your ability to invest in real estate. But right now, we're talking about those three main goals. It's your credit, it's your income, and it's your aspirations. So based on those 3 things, we're gonna come up with a comprehensive plan. So whenever I'm working with someone, I look at those factors and some other key indicators, but those major factors, to be able to put in motion what you need. We'll also look at your savings. How much savings do you have? What is your ability to save? And where is your money in the market right now? Listen, I don't prefer stocks. I like real estate because it's a tangible asset. It's a physical asset. People always need somewhere to live. At the same time, I do believe in a balanced portfolio. People who are selling real estate or investments or developers a lot of time will tell you real estate is infallible. It's the perfect investment. I don't believe any investment is perfect, but what I do believe is that we always can mitigate the downside of investments. The major downside of this particular investment is liquidity. When you're dealing with real estate, it is not very liquid. If you need $50,000 tomorrow and you have stocks, you can liquidate them. Do I know if you're gonna make money or lose money? I'm not sure. But what you need that money for may be so important that whether you're gonna make money or lose money is immaterial at that point. You need the money now, and real estate, even on a refinance, may take 3 months or 2 months. That may not help you. So liquidity is a key factor. Now, one way to mitigate the issue of liquidity when it comes to real estate is to have cash flow. If you are making cash flow, which is monthly income, over and above your expense on a property every month, you can take that cash flow and put it aside. Those monies that you make from cash flow can be invested safely in RSPs, TFSAs, GICs, and mutual funds. So I definitely think that there is a place for these financial instruments in your life, but I think real estate should be the foundation. That should be the fundamental building block. So when I'm looking at someone to invest, that is another aspect that I want to make sure that they have. Do they have a sound financial backing? And then I want to educate them. That's my goal. It's to always educate people so they can make their own decisions. I want them to explore what other people's opinions are and then come back to me and let's have a conversation. Now, when we're speaking about opinions, and we go back to some literature that I've always read and I've been inspired by, when you're going to get advice from people, make sure they are people who have already been successful in real estate. Not necessarily that they're multimillionaires or they have a vast array of properties, but I want them to have some fundamental basis. Many times people are receiving advice from people about real estate or something else, but they're neophytes in that particular environment. So if I want to speak to someone about my financial portfolio or my real estate investments, I'm going to speak to someone who's on the same or similar level that I am, so I can get information I can rely on. And then I'm going to take all that metadata and then I'm going to make a sound decision. So whenever you're making a decision or I'm choosing to work with someone, I always look at those several key indicators in deciding what really makes sense. So here in the masterclass today, we're going to talk about credit. Credit is king. It's a very important thing. In many ways, credit is more important than actually having cash. You can have $100,000 in cash right now and bad credit and you're not gonna get a mortgage. You can have $20,000 in cash and good credit, you're gonna get funded every time. When you look at the situation, there are two companies who are monitoring your credit right now, which is Equifax and TransUnion. These are the frontiers of the credit corporation, and they are gonna give you your scores. What I always advise people to do is sign up for a monthly score check on one of these services. Equifax, to me, is the premier service. There's a service for around $24.95 a month. You will get your regular credit bureau updates. The minimum score you need to purchase real estate with an A lender is a 650 beacon. So that the scores range from 300 to 900. 650 is normally a minimum score. You can go to an alternate lender or a B lender, which is not a tier 1 bank, and they can provide financing to persons who have less than stellar credit. However, you're gonna pay additional interest, and these interests are gonna affect your ability to be profitable, whether it's your primary, secondary residence, or an investment. So when we're talking about credit, what does it mean, and how can you keep your credit score as high as it needs to be on a day-to-day basis? Well, one of the things that you can't change is your age. That is one of the key components. So if you're younger, it is going to be a little bit more difficult to get into the upper tier of credit, which would be the 800 plus. But if you still have a 700 beacon, it's more than enough to get you the type of products and services that you're looking for. But age is one of the main factors. Income is a factor. Paying your bills on time. I always recommend people to pay everything on time, regardless, even if it's only the minimum payment. So every credit product has a minimum monthly payment that's due. If you're in financial trouble or you're not able to make additional payments, please pay the minimum payment, even if it means borrowing money from your savings or maybe having friends and family help you out, because you need to maintain your credit. When you're looking at credit, 2 years is where the credit bureau is most impacted. So if you've had any blemishes, if you had any late payments, the last 2 years is going to be the most impactful. After that, the impact wears off on whatever is on the bureau, whether it's good or bad. Now, it will stay on your credit bureau for 7 years. But normally when you're looking for to receive money from financial institutions, the first 2 years is what they're looking at as a primary concern, although you do need to understand keeping your credit is a long-term objective. It's something that you have to do over a long-term cycle. Now, if you're in a situation where you've had any bankruptcies or you've been put in collections, I always advise with a bankruptcy or a collection to get it paid right away. If you have a collection item, you may dodge a bullet. You may be in a situation where it's not on your credit bureau, because sometimes if you owe money, it's not a monthly obligation, it won't get on your credit bureau. So if someone from a collection agency calls you, make sure that you ask yourself or communicate with them, has this already been placed on my bureau? Of course, if you've been pulling your bureau monthly, you're already gonna know. If it doesn't, you can make payment arrangements before it goes on your credit bureau and negatively impacts you for the next 7 years. Now, if you've already gone bankrupt, there's nothing we can do at this point beside the fact is reestablishing your credit and making sure moving forward that we keep the credit good for at least a 24-month period to reestablish, and then we're going to move beyond that. But the first 24 months again will be the major catalyst to keeping your credit good and to allow you to invest in real estate and to buy other investment products. You're going to need to keep your credit in pristine condition. So this is what I'm always stressing, is to maintain and manage your credit and make sure that you're making at least your minimum payments.